Welcome to the Trading Bell Show. I hope you're keeping well. I'm here with Chris Flowers, the Managing Director of Kakuzi PLC, and they have just launched their brand. I know you're curious about to know what is that again that they just did, but he's here to help us understand what they just did. Chris, welcome to the show.
Thank you so much.
Good. Last we had a conversation with you was when you were launching your sustainability report, and it's good to see the progress that you have done, and there's a lot to talk about. But first, let's talk about your new brand identity, if I may call it that. But you're here to educate us. What informed this, and what are we looking at now?
So Kakuzi was established in 1927.
Yeah.
And for roughly the last 100 years, we've had a company, a great company, but we've never had a brand that crafts our identity. Mm-hmm. And we stand for so much in terms of values, purpose, impact. Mm-hmm. And today's world demands so much of modern brands that we needed to identify what is the value, what's our value to society, what's our value to different stakeholders. Yeah. What do we stand for? Mm-hmm. And that's what came out with our brand, which is Kakuzi Growing Together.
Okay, congratulations on that. I heard you say that a brand is not just about what you say about yourself, but what others say about you. So you're really looking forward to customers really speaking about you.
Yeah, honest dialogue, authentic dialogue is important to a brand's integrity. Mm-hmm. And we know at times that people will say some good things. We know at times that people may not say some good things. We've got to be open to that and be able to listen to it and to react to it in a credible and a transparent manner.
Absolutely, absolutely. The last conversation we had with you, you told me that you have a serious population that lives with you, and definitely they matter on what they say about you. But let's talk about your theme and strategy. I have been seeing that you're quite bullish, and I think you released a statement saying that, our produce and market diversity still holds on. Tell us more about it.
So as you know, we're a big exporter. Yeah. We're the biggest exporter, the biggest producer of avocados, one of the biggest exporters of macadamias. We just launched a superfood range of blueberries as well. Mm. But until we created this brand, we didn't really have a domestic presence. Uh-huh. And this is about bringing high quality, nutritious, sustainable and responsibly grown products to Kenyan consumers at prices that are affordable. Mm-hmm. We've just launched a macadamia oil product, which is at affordable prices. We're hoping that our nuts will be at affordable prices as well. Yeah. And then obviously our meat range is there and other products as well. Okay.
And that's lovely. I'm curious to know how is the reception like? Because you're dealing with a lot of, let me call them, external customers as well. And I think you've also mentioned that you'll be also focusing on selling even locally as much. How is the reception like on the new products and the diversification that you brought in?
We launched our new oil plant, which is processing macadamia kernel from our own orchards in a cold press manner, so it preserves the integrity of the product. Indeed. The first week we launched, we sold 40 liters of oil. Whoa. We're now selling 100. The first week, we're now selling 150 liters a week, and we've got a capacity to quadruple that. So without any marketing whatsoever, the demand from just our communities around us for farm to fork credentials. I know what went into making this product. Mm-hmm. I know where it's come from. Mm-hmm. Is a really, really important part of it.
Speaking about the community, you are working with a lot of the community, if I may use that, and maybe you could elaborate that a bit more, but more so touch on what you're doing with smallholder farmers, because we know I have seen some people come to get some knowledge from your end. Yeah.
On the sort of community stuff, we've got a lot of very important initiatives. One of them is Jiko Kasasa, which is actually the stove of the now. Yeah. And we put about 900 of these stoves into various villages, various communities which surround Kakuzi. Mm-hmm. And the whole importance of that is actually reduces by about 30 to 40% the amount of wood that someone has to use to prepare a meal. Mm-hmm. So you can imagine the knock-on effect of that. If you don't have to get so much wood, the environmental impact, the positive environmental impact, the impact on somebody's time because they're not running off to collect that wood. Mm-hmm. They're all important contributors to a better lifestyle. Yeah. That's one important bit. But The other one that we really focus on is knowledge, and we've seen a lot of the conversation around the crops that we grow and people characterizing them as green gold. And I have to say, nothing can be further from the truth.
Green gold.
Green gold. I mean, if understanding how you plant a product that is going to have a sale value internationally, that's a critical message that we need to give to farmers before they're making the decision, do you or do you not want to take your valuable land and put it to this crop? Because the risk and reward of doing that is quite high.
Thank you for that, Chris. You posted 62% growth in your profits last year, which is really commendable. And it's progressive growth over time. And just wanted to ask, what has brought these numbers?
There was a combination of all the crops coming together. And so we had a good year in avocados, we had a good year in macadamias, mainly because we had secured sales prior to the COVID pandemic. But the COVID pandemic has had a major impact on the consumption of macadamias. And so, as you know from the news, the macadamia industry worldwide is facing a lot of headwinds. So we are obviously a big producer of macadamias, and when we are facing the same headwinds that everybody else is facing. So yeah, it was a combination of lots of things that we had in place, all came together.
Great, and I saw you gave your shareholders 24 shillings. But
yes,
it's good news for the shareholders. Of course, shareholders will always be concerned. Are we expecting to keep ripping as we are ripping? What's your word for them?
We have got a strategy which is about growth. We grow our crops, and as we've just been showing today, and the strategy's been looked at by the board, and the investments that we require are very much within our means, but we've got to continue to diversify. The blueberry investment is a major investment if that commercial trial really shows what we think it will show. And then everything that we've been talking about today, diversifying into the domestic markets is key as well.
Your brand, combined experience, as you said, is 700 years. That's quite a shock. That's quite big. And you've been in existence since 1927. What are your key takeouts on all this, and what can brands as well learn from this, and companies that are hoping to live into decades like you have? You're about to hit a century.
We've actually just completed an employee satisfaction survey, and we did one a few years ago, and now we've just brought in the same consultants to redo it again. And we're really impressed with the way that our management team has grown with us and grown into this new value proposition that we've been talking about today. And when we actually then started to look at the numbers and add up the experience of all of our managers, I was staggered as well. But 700 years, 76 people, 700 years of combined experience. That's a pretty enviable position to have as a business.
Absolutely. Speaking to other, you might call them manufacturers as well and farmers as well, they're facing quite some headwinds. One of it would be access to markets, but some of them are seeing opportunities with the opening up of markets like the Africa continental free trade area. And I'm curious to know whether those are things that excite you as well. And others talk about cost of production and, those kind of challenges as well. I don't know, what is your entry of challenges? And are you excited about these open markets that we're having conversations about?
I mean, the challenges are there, but the way of dealing with challenges is trying to turn them into an opportunity. And I think we're seeing a real burgeoning demand for high quality, traceable products. And what do I mean by traceable? It's not, this is the geography of where that was growing. It's about, can I be sure that the food I'm feeding my family, I know exactly how it was produced, and I've got confidence that I'm being told the truth. So whether it was grown with a certain chemical or a certain fertilizer, how it was harvested, how it was processed, all of that is traceability. And there's a big market, not just in Kenya, but regionally now as well, which is wanting to make sure that food is safe for families, for personal consumption.
I have a friend who was constructing the other day, and I think they needed to fence their area. And when they were getting the poles to fence, they said we need to go to, I think it was along the highway where you, and then I was curious to know where is that? They say Kakuzi. And so definitely I see there's also a diversification, if I may call it that as well, into the industry of wood, if I may call it that. How is that doing?
It's been doing very well for quite a few years. I mean, sustainable wood production is a very key topic at the moment. But there's a lot of conversations about what does that actually mean. Now, for us at Kakuzi, we have about 1,500 hectares of forestry that we fell on a 10 to 12 year cycle. So we fell every 12 years a certain area and replant straight away. So we've constantly got wood in rotation, which basically means we've got a business that we can constantly supply consumers with products that they know are growing responsibly.
And the cycle has been going very well along. Is that achievable large scale in the country? Because this has been a ripe conversation.
I think it is achievable, yes.
Okay.
I believe that.
Okay. Congratulations once again on your new brand. We expect just the best out of it.
Thank you so much.
Thank you so much for your time. Yeah. There you have it. That's Chris Flowers, the Managing Director, Kakuzi PLC. Just speaking to him after their new brand launch. And of course, he's very optimistic of the future and them keeping the diversification agenda on and growing. Welcome to Market Analysis, and I'm here with Solomon Kariuki, AIB Access Research Analyst, to just understand how's the market doing. Solomon, welcome to the show.
Thank you, Maina.
It's been some time, and it's good to see you here.
Yeah.
I want to start with a quick question. What's the state of activity in the market now that you see?
I'd say the market at the moment is quite low.
Yeah.
We have seen moments of slow uptake or slow trading for various reasons.
Yes.
Because there have been some prevailing macroeconomic challenges. Investors are fearful given to what is happening in inflation.
Yes.
Foreigners are also fearful of the currency. So we have seen a little bit of a slowdown in market trading.
Okay.
In comparison to last year.
Okay.
Like this.
All right. I know we have varying sectors, but I would want you to pick one or two and tell me, some of the sectors that are still quite vibrant.
I think surprisingly, we have seen the agricultural sector quite do well this year. We have seen counters such as Williamson gaining plus 50% to date. You have seen counters such as Kafshoro also gaining plus 50%. And we have also seen counters such as Kakuzi and Sasini also do well.
Okay.
So one of the reasons why the sector is doing well is because they earn in dollars.
Yeah.
So their revenue has been coming in dollars, and the depreciation, I would say, has been a positive for them because that means they're going to get more earnings.
Okay.
And then that has translated to shareholders who have been getting dividend returns.
Okay.
So notably, the agricultural sector is one of the most consistent in terms of dividend payments. It has been seen this year. And of the 6 listed counters, 5 of them are dividend paying. So that has been one of the key drivers of the good performance in the sector.
You're right. In fact, we just had an interview with Kakuzi, and they paid very good dividends. Let's go directly now to some of the losers and gainers. And I'm seeing in terms of week-to-week look at some of the top gainers are Can General, Unga Group, Longhorn, Williamson, Sanlam. Anything that you see, any company that you see, and any reasons why?
I would think, as I highlighted, Williamson. The dividend really was very attractive for investors.
Okay.
And we saw the share price move from around 150 to a high of around 260.
Yeah.
So that was very positive for investors.
Okay.
So for the other counters, mainly it's because they are coming down from a low base. They had not been doing well for the last few months. In the last 3-4 weeks, investors have started picking up.
Okay.
I would say it's investors who are seeing opportunities in them. It's not something really fundamentally driven. But more so it's coming from some speculative trades here and there, because if you look at the volumes, they're not that big.
Okay.
So it's just investors who are seeing an opportunity to get in, and that is what is driving the share price up.
Okay. Let's talk about the losers as well. I see some of the companies are Eveready, Samia, Olympia, Stanbic, but interesting enough, I also see Safaricom. I think people are rallying, hoping it can now shoot up and the likes. I don't know, what are your observations?
So for Safaricom, you have to keep in mind that they had a book closure on 28th of July.
Yes.
So at that point, then I would think that investors are looking to cash out, especially after booking the dividends. So in recent months, Safaricom has been a preferred counter for speculators. So who are looking at it, they're waiting for it to get to 14, you buy, and then once it gets to 18, you sell.
Yeah.
And so that coincided with the book closure.
Okay.
And that can also be skewed by those are huge trades that happened at the end of July that maybe triggered the sell-off that you have seen at the moment.
Okay.
But all in all, Safaricom remains a good buy. The fundamentals are strong.
Yeah.
We have seen growth in the M-Pesa business. We have seen some shocks in Ethiopia, but we expect them to overcome them in the long term.
Yeah.
And we have also seen some good business in the data unit.
Okay.
So those are some of the key drivers that we see are going to continue driving Safaricom's growth. Okay. And should continue giving value to shareholders in the long term.
Yeah. One of the investors asked me, can you ask Solomon whether Safaricom is ever going to get to the 30s that we saw some time back? What are you going to tell him?
Hopefully, yes.
Yeah.
In my analysis, my target price at the moment is 23.71.
Okay.
I had to be a little bit conservative because of what is happening in Ethiopia. There is the conflict in the Tigray region. So the conflict in itself is delaying outlay into those areas. And we have also seen the talk of another license, a land license.
Yeah.
So that would mean, as by my estimates, the entry of a land license then would slow down some of the growth numbers that you have seen.
Okay.
Yeah.
The indices are quite low. And what does this mean for investors from your perspective?
I'd say for investors is the best time to come in.
Yeah.
Because if you look at the NSE overall, price to earnings ratio for the whole market, it's been trading at around 6-7 times. And if you look at the historical, it's around 11-12. So you see the market is trading at around 40 to 50% discount.
Yeah.
So that means in general, it's a good opportunity for investors to buy in.
Okay.
The key thing is for investors to look at the right opportunity because the market has good and bad side of it.
Yeah.
So it's focusing on the good and also looking out at the risks that could turn it to the bad. Okay. So there are some still individual stories in there that are quite positive. And there are good value plays within the listed company. So there's still opportunity for investors to come in.
Yeah.
More specifically, if you look at sectors such as banking, if you look at the book value valuation, the price to book, for the last 1 year for the banking sector has been around 0.6 times.
Yeah.
Compare that with frontier peers who are trading at 0.9. So for a foreign investor looking to come into the Kenyan market, then at least there is some level of discount there compared to other frontier peers.
Okay. Yeah. I don't know. I want to put you on the spot again because you've mentioned about the fundamentals at Safaricom and what you're predicting. Someone could be saying, can you mention maybe 1-2 more or something on that? So any other best bets for your end?
I would say banking.
Yeah.
We are expecting half-year results from tomorrow.
Yeah.
So we expect some good print on that.
Yeah.
They have been doing well. Yes, with challenges here and there in terms of lending. The lending environment has not been very conducive. So we expect some slow growth in the loan book. Yeah. And at the same time, they have been allocating their money to government security. So you find that the yield curve has really steepened. Is a positive and a negative. A negative for historical bond holdings because it means it's a negative for them in terms of price valuations for those bonds. But then it's a positive for recent acquisitions for bonds. Okay. And then at the same time, you find that the FX shortage has created arbitrage opportunities for banks. So you find that they've found opportunities to grow the forex trading income. And you also find that the reversal of more bank to mobile charges then is also a key positive for them. So they will be able to balance out the decline in interest income from lending with the growth in FX trading income and the commissions that they charge and also the income from government securities. Yeah. Another negative we expect from the banking sector is we expect increased provisioning, impairment provisioning for loans. Yeah. Something we noted in the full year results for FY22 is that perhaps the reduced provisioning we saw in FY22 and some bit of 21 came in a bit early. So we expect them to reverse that and go back to aggressive provisioning like we saw in 2020.
Okay.
And so that could eat into some of their profits.
Okay.
But all in all, we expect some positive results. Interim dividends maybe from NCBA and Stanchart, probably ABSA.
Yeah.
And probably another interim dividend from Stanbic in Q3.
Okay. Speaking about government bonds and the likes, there has been quite some interesting percentages that have really attracted people here. But there's also this whole transition to the new platform that has been put up by the CBK. What are your observations and what would you tell investors?
So I'd say for the new CBK platform, the DAO CSD, from where we sit, it's in the long term, it's a very positive platform, mostly for retail investors. Because you find in the last few years, there have been a lot of interest on investing in government securities, mostly from retail investors. And that was very evident in the issuance of Makiba some years back. So the new platform will enable retail investors to participate without much hassle or without much issues, like walking physically to your bank or walking to the CBK banking halls. So it will enable retail investors to participate, and also diaspora investors. They have been locked out of the government securities market. So in the long term, we see that increasing uptick for government securities, mostly on the retail side. And so that would mean that the government will have to balance between being conservative in what they are accepting, because from where we see it, the market is quite aggressive. So remember, the inflation has been up. The government debt sustainability questions have come up. So that means investors are looking for a premium from the market or from the government.
Okay.
And that's why you find that the yields are going up. So then that means that investors now will be quite aggressive because they're trying to protect that yield rate of return. Trying to look for the premium to cover for the increased risk from the government and also from the prevailing macro challenge.
Okay. Yeah. All right. And finally, let's talk about the dollar. There's been some shocking news here and there and, speculations of where it's headed to. What's in your review?
From where we sit, we do not expect the dollar the challenges facing the dollar to go away now, probably in the near term, but in the short term, they're going to persist, mainly because there have been pressure in terms of import demand. So Kenya being a net importer means that we are demanding more dollars than we get from our exports. So our exports being agriculture, tourism, and diaspora remittance, they have not been performing well. Remember, in developed markets, they also have their challenges. In Europe, in US, there is inflation, there is job losses and all those. So that has been eating into how much diaspora remittance is coming back home. That is our biggest source of dollars. And you also find that global prices for coffee and tea have also had challenges. Our key export markets for tea, that is Sudan, Egypt, and Pakistan, have their own issues. So then that has reduced the amount of exports we are earning from those key commodities.
Okay.
On the other side, the imports led by energy. I think in today's paper we saw that there was a huge importation of food. Or staple food, the rice and the maize, the sugar. And then there is also, the fight of government to government oil. It's leading in the next 2 months. So we expect a lot of dollar demand on that. So that should put an added pressure on the shilling against the dollar.
Okay.
So in the near term, we don't see any relief on the Kenyan shilling. And at the rate at which it's depreciating, it's around 1.2, 1.3% per month. We expect it to close at around 150 to 153 by the.
Okay.
So what you have noted is also the widening of the spreads between what the CBK has quoted and what you're going to find in your local commercial bank. So you find that CBK quote is around 143 and your bank is selling at 150. So there is a spread of around 7 to 10 shillings, depending on the bank. And that is going to persist because of the more of the challenges in the FX interbank market that we have observed in the last, for the better part of this year.
Okay.
So our outlook for the local shilling is not tidy.
Okay.
We are a bit conservative.
Yes.
It's been a little bit negative. But then, plus, the efforts from the government and from the private sector, then it would see some moments of relief here and there.
Okay. Wow. Thank you so much, Solomon, for your time. That's it right here on the Trading Bell. I hope you enjoyed the conversation with the Kakuzi CEO and, of course, with Solomon himself right here. See you for now. Bye-bye.